Welcome everybody to the Las Vegas Home Buying webinar. My name is Bill Renteria. I'm the VP of Sales and Marketing here in Las Vegas, and really grateful to have this opportunity to talk to you. My history is I've been with Taylor Morrison 3 years, but in the industry 25. I'm responsible for just kind of doing strategic planning, also just kind of running the division here to make sure that we are servicing you guys to the best of our ability. I'm also here with Miss Deanna Ball from our TMHF team. She'll also be hosting through this presentation to kind of help you navigate, hopefully, your new buying home experience. What we're going to cover today is who we are, just basics of home buying, the 4 C's of mortgage qualification. Are you able, ready, and are you ready to own? Navigating a path really is important to most people, so we'll kind of hit on that. Just Las Vegas as a whole, as a market. New home buying benefits, and the steps necessary to kind of complete the transaction. Also, during this process, you'll have the opportunity to ask questions. So you'll see in our chat feature, you have the live ability to ask questions as we go. And as we get an opportunity, we're going to address those questions so that we can answer anything really relevant to you specific. And if it's for everybody, we'll kind of announce it over and everybody else will hear exactly your question. So that's kind of what we'll see going through this. And for the new person that joined, welcome. Taylor Morrison, we're actually one of the largest builders in the nation. We build in 20 markets across the nation, kind of like the Smile States. Going all the way around, we're the 7th largest home builder in the US currently. Been building for over 100 years, started out in the UK. Been recognized as the most trusted builder. That's something we take great pride in. So that comes through the consumers that have purchased from Taylor Morrison and actually feel that we've done a great job for them. So that's something we're very proud of here at Taylor Morrison. We also have the ability to serve almost anybody as far as demographic wise and your purchasing ability, whether you're a first-time buyer, first-time move-up, a luxury buyer, or you're in your final place where you want to go through and really enjoy just the time at our community. We have a very lifestyle-driven, active adult community known as Esplanade or Ovation here in Las Vegas. It's an Ovation community. Very, very proud of that because you have just the absolute best environment for our residents. We've been recognized by Forbes, also by Fortune, and honored of being part of Bloomberg's Gender Equality Index Guide. And so that's something we take great pride in, is great diversity here at Taylor Morrison. So we serve almost everybody. All right, guys, Home Buying 101. What we want to talk about here is basically what we do at Taylor Morrison. We try our very best to make sure that we give you the most accessibility to our communities, whether it be online or actually on site. What we've done is we've taken the time to go through and make sure that we are very you focused. What does that mean? You are an individual, you do things different than maybe your neighbor. So if you like using your mobile device, we've tailored our website to actually be more mobile friendly. If you like just going to a community, we have our communities with actual community sales managers on site that will host and show you around to help you find the home of your dream. And we also have virtual tours. So at certain communities, we're kind of evolving. We have situations where you could go through and actually visit a community that isn't hosted by a sales manager. You'll be able to self-tour. So maybe your hours are a little bit less normal than some others. We want to give you the ability to still reach us. That's kind of why we've evolved and made it more you-focused. How do you book an appointment? You can do that by going on our website and actually self-generating an appointment. You can actually call the community at any of our links. You can actually go online, click on the community, get a phone number, and set an appointment. Or you can call our internet home counselor. They also have the ability to sit there and schedule an appointment with you. One of your better options is using an internet home consultant. The reason why I feel that way is they can take the time to find out what best suits you based on whether it be your budget, your time, or your desired home requirements, whether it's 2 bedrooms, 3 bedrooms, 5 bedrooms. We'll try to help guide you in the right direction to save time. That's our biggest focus, is making this more user-friendly and more efficient. I kind of went through the booking of appointment. You can actually pick a home site if you're looking for a quick move-in to go down that road. One of the other things you can do in this is really taking the time to go through and qualify. That kind of helps you guide your time. right? One of the things a lot of people will ask us is, well, how much do I qualify for? In today's market, it's very important for you to kind of figure that out to help better streamline your search. So since home buying is very personal, we talked about the internet home consultants. They are a great resource for you. It's like having your own online concierge where they can come through and help you better fit your search. We know time's valuable and you want to make sure you're looking in the right areas. They can do that for you. They can set the appointment, they can answer questions, they can get you in touch with any of our people that were ready to help you. Community sales managers, who are they? They are the people that we have on site at our communities, there to help answer your questions and guide you through what we have available. One of the benefits is they have been in the industry and really worked hard to figure out what's really great about their product and also whether or not it's the right fit for you. Our design team, we have a design studio, which they have curated a lot of our homes that we have that are considered to be complete, or what we have is considered showcase homes. Those are the ability to go through and have a house that's almost move-in ready. They've been professionally designed. They have color coordinated palettes and today's design criteria in mind. We have what's called construction superintendents. They are the people that oversee the construction of your home. They take the time to go through and meet with inspectors to make sure the highest quality standards are at our utmost desired levels. They meet with the inspectors, they meet with the city, and they also meet with you. So once you go into contract and decide that you want to purchase a home from us, you'll have different milestones where you'll be able to go through and meet with our construction superintendents. If you do a to-be-built home, what that means is a home that you're going to personally design and actually pick the selections for. Our superintendent will meet you prior to construction to confirm the items that you've selected for your home. Then when we get to what we call pre-drywall, that means once we get the insulation ready to go, we have your plumbing in, all of your hardwiring in, you're going to meet with their superintendent to make sure that you can kind of see the nuts and bolts of your house. After that, you're going to go to what's called a new home demonstration. At that point, we've gone through all the inspections, we've gotten the ability to get you in your house, and we want to demonstrate your home to you. That's your opportunity to see your home, how it functions, all the new gadgets, whether it be apps that are on your appliances, your water heater, or your thermostat. You know, your home is very smart nowadays, so it's great to take that opportunity to get that information. You'll also, during this process, meet with a loan consultant. Deanna and her team will be able to help you best fit your needs for your payment and really what makes the most sense for all of you at that point in time. Whether it's an interest rate or just getting in the house, maybe you need additional help with closing, or maybe you just want the best fit for long term, or maybe it's a short term. Those are the things they can discuss with you. ARO consultants will help our friends that are currently not in a position ready to buy but want to buy in the future. They can help get you set up, and so you have a plan. We believe in planning and having a plan to actually get you into a new home in the future. So we have these great opportunities for you all within one shop. I'm going to hand it over to my friend Christy.
Thank you, Bill. Good afternoon, everybody. It is afternoon in Vegas, I believe, officially. I'm Christy Farrow. I have been with Taylor Morrison for over 20 years. I'm actually located in Florida here on the East Coast. I oversee our Florida region and work nationally with our sales training and marketing initiatives, which we'll talk a little bit about today. Just wanted to mention, you know, being with Taylor Morrison for over 20 years and really having home building be part of my place in the financial world is really a passion and centered on being part of that home buying journey with our customers. And we're going to take some time today to just talk to you about some high level qualification. And with that, we can move to our next slide. Thank you, Adrian. You know, I just want to mention that, you know, buying a new home really should be an exciting time for any family, but there, you know, I'm just going to say the elephant in the room and realize that kind of the financial side isn't the fun part, and the thought of undressing finances and taking on a 30-year debt is not super exciting, but hopefully today we can ease any of those concerns. We may have some folks that are joining us today that are in the market to buy their first home. Maybe you've kind of been there, done that, but new construction is going to be a unique experience for you compared to purchasing a resale home. And Bill just mentioned, at Taylor Morrison, we really truly believe in one-stop shop, and we've created that for our customers by having construction, mortgage, and closing all under one umbrella. And so by doing that, it really helps relieve you as the customer from that burden of communication and being that liaison between your builder, your lender, your closing agent, and then if you're working with a real estate agent, there's a lot of moving parts and a lot of people involved, and we're here to do that for you. But in addition to our mortgage services, we have Taylor Morrison Insurance, Inspired Title Services, both again being under that umbrella to keep that seamless journey happening. And we're going to talk a little bit today about, Bill mentioned Arrow, Able, Ready, Own, and we've got our expert, our subject matter expert here, Deandra, to talk about that, as well as Deanna is going to introduce you to Dorothy, our technology platform. So over this next segment of our webinar, we just, again, want to scratch the surface on that high-level loan qualification components and share the information about a couple of other departments as well and how you can start that journey. So I just want to remind everybody, if you haven't noticed, there is a live event Q&A. If you do have any questions that come up along the way, we do have our team here to help answer those for you. So let's move on and get started with our foundation of mortgage qualification. So, again, appreciating that some of you may have currently owned a home, or you may currently or maybe have previously owned a home. We do have those first timers. So scratching those basic surface of loan qualification is so extremely important. And a lot of industry professionals do refer to that foundation as the 4 C's of mortgage qualification. Personally, I'm very visual, and I prefer to compare that loan qualification to the 4 legs of a chair. I know that I would not sit in a chair with wobbly legs for fear of falling over, and mortgage lending is truly no different. And we want to make sure that that qualification has those 4 strong legs that give the stability that you need to move forward and then be able to remain in your home for years to come. And when you're lending hundreds of thousands of dollars, we have to understand these 4 components. One being obviously the value of the property or that collateral for which the loan is being secured against. Lenders also have to understand borrower's ability to save those funds to purchase the home. Is there the ability to repay the loan? And then lastly, evaluate that strength and credit history to pay debts timely. So we'll touch on each of those individually and give that general understanding and hopefully help you assist in discovering where you might be in that journey to home ownership. So I'm going to get us started talking about property value, these exciting topics. So property appraisal reports are going to be required on every single loan transaction. They are certainly completed by an unbiased third party licensed appraiser. So there is no influence that's given by us as the lender or you as the home buyer. And we have to, not only make sure that we're lending appropriately to the value of the home, but you want to make sure that you understand the value of the home you purchased compared to that price you agreed to pay when you went under contract. Now, closed comparable sales from like-sized properties are going to be used to establish the value, not necessarily those homes that are under contract pending that final closing. And just keeping in mind that an appraisal report is a value analysis for that moment in time, and it's good for 6 months. We know that values change all the time. Purchase prices are constantly moving, and with new construction, we wait to order that appraisal until about 60 days prior to home completion, because we want to make sure we have real-time home value, not what it was 6 months ago when you first purchased. We need to know what's been closing most recently. And again, I just want to kind of touch on just the obvious. There's a lot of consumer fear over rising interest rates. There's a lot of thoughts out there about, significant future home price decreases. Is the bottom going to fall out? And we get a lot of questions during our webinars about, what ifs? What if my home value doesn't come in to what I agreed to buy at 5 months ago? And, we do have those rare occasions where the appraised value does come in below purchase price, but more times than not, we can resolve that through financing. And an increase in a loan to value really does not necessarily impact the financing itself, your cash to close, your payment. And we do try to be very careful and would recommend to consumer as well, because as you reduce price to mirror past closings, it is not always the best option for the home buyer, because it will have that potential domino effect of home depreciation within your community. And I'd be foolish not to mention that we have seen historic home appreciation over the last 2 years, coupled with historic low interest rates. In the last 2 years, we've seen nationally 9 and 15% increases in home prices year over year in value. And the rising interest rates have certainly slowed those new and existing home sales. We've seen, I think, about a 375 basis point increase in mortgage rates, essentially doubling year over year. And, it is anticipated that the home appreciation is going to level out to those historical averages. We're in a time of normalization, and those historical averages are still showing home appreciation nationally at 5% a year. And we don't expect to see any significant correction to the market that the housing crash of 07 and 08 saw. So some of you that maybe were old enough back then, like myself, and remember that, and I actually worked in the business, just remembering that a lot of what happened, 15 years ago was primarily due to a high supply of housing, which we're in the opposite. We have a low supply of housing right now. And right now we have prudent lending guidelines. And back then we were not as regulated, and there weren't as prudent lending guidelines. And so by having, the low supply of housing coupled with the prudent lending guidelines, we're able to provide credit to borrowers who can really afford the purchase and maintain that strong equity in their homes for years to come. So moving on to our second leg of our chair, which is really our down payment and cash needed to close. We do have to verify the source of those funds, and this is extremely important. And we do see a lot of trip ups on this sometimes along the way. But we do have to look at your down payment. Where did those funds come from? And your maximum loan amount is going to be determined by that sales price or appraised value, whichever is less. And you're going to have a minimum down payment requirement. And that's going to vary by your loan product and your occupancy type, whether you're going to be owning the home to live, it's a vacation home for you, or perhaps you're looking to purchase a home as a future rental property. But the guidelines are established for where your down payments can originate from. And we've included both the acceptable and unacceptable sources within this presentation. And again, we'll be sending this out to you post-webinar. But just a couple of things I want to scratch on here. You want to make sure that if you're transferring any funds in and out of bank accounts, or you have any deposits that are not obvious payroll deposits, we need to source those through a paper trail between those accounts. You might be receiving a gift from a family member, a spouse, a partner, or perhaps sold real estate, another home. Those are just some examples, and we just want to make sure there's a paper trail. And we do always want to mention to shy away from what we would refer to as mattress money. So if you do have a tendency to save cash on hand, we recommend getting those funds into a bank account for seasoning so they can be paper trailed. And the next, as part of your funds needed for closing, is your earnest money deposit. So when you make that buying decision, there is an earnest money deposit required by the seller at the time you go to contract. Taylor Morrison does have a required deposit, and it may vary community by community, so I don't speak specifics on that. But that earnest money deposit is going to be applied towards your down payment when your home closes. So it's super important you have the ability to provide the proof of those deposit funds and the source and where they came from. Again, there's homes that are quick home closes, that are inventory homes that Bill mentioned, that are ready to close in the next 30 to 45 days. And there's new construction that could be 9 months out. But regardless of when you gave the earnest money, it does have to be sourced. And if you have any unique circumstances, we have a team of local loan consultants. Deanna and her team are always available to answer those individual questions. And then lastly, with the cash needed for closing, you've got your down payment, but you also have settlement costs that are associated with buying a home. And those settlement costs will include things such as lender and title fees. There could be government fees and municipality transfer taxes, along with prepaid items like your first year of homeowners insurance, setting up your escrow account so you can pay taxes and insurance each year. And we do have loan programs that allow borrowers to pay their taxes and insurance separately, and that can help reduce the cash needed to close. And then lastly, most of our communities have a homeowners association. So there could be startup fees and costs at the time of closing that could be related to that particular community. But what you have is interested parties that are in your purchase, and those would include your seller, your lender, and perhaps a real estate agent. And although none of us can contribute towards your down payment, we can contribute towards some of these costs associated with financing. All of our Taylor Morrison communities provide a contribution towards your financing costs as an incentive when you use Taylor Morrison Home Funding for your mortgage. And then Taylor Morrison Home Funding actually doubles down with a lender credit at closing. There are some maximum limitations as to how much an interested party can provide, and it's based on a percentage of your sales price. But many loan programs allow for those costs to be covered, the majority, if not all of those costs. And we're going to be sharing at the end of this presentation some of those incredible financing incentives that Taylor Morrison's offering currently, and how you can use those in many, many ways to save. But I will wrap my time with you up talking about capacity, our third leg of the chair, which is just simply referring to your ability to repay your mortgage through job stability and the likelihood of your income continuing. And it is super important to note that a mortgage approval is always based on gross income versus net income or take-home pay. A lot of times it is a myth thought that, whatever you bring home in your paycheck is what's used to qualify, but it's not. It's your gross income, which is pre-tax, pre-insurance, and then there's guidelines that are set on that. And Deanna Ball will go over with you. She's our branch manager there in Vegas, and kind of hit on those monthly income and debts and how to understand your maximum spend against that income that's used for qualification. I'll talk really quick about job stability. Looking rule of thumb for a 2-year job history in the same line of work, not necessarily the same employer, that is required. There are exceptions to a lot of things, and this is one of them. So just a couple examples, if you've had a gap in employment due to a hardship, or someone in your family has taken time off and re-entering the workforce, that can be considered. I always like to mention our college students who are graduating, they're new graduates and with their degree, and they're entering the workforce and they are receiving that W-2 wage earner employment. That certainly can be considered for qualification as well. Self-employment is a little bit unique and can be tricky. There is a different type of income evaluation using 2 years of average tax returns with an income analysis, and it's not quite as black and white as W-2 wage earning, and requires many times a deeper dive to determine what that qualifying income is. So if you are self-employed and you feel your income stream is unique, and any specific questions, again, I will refer you back to one of our licensed loan officers to answer those questions, or even review documentation to get you to that good spot. Because we truly believe if you can uncover those obstacles before you purchase, it is highly recommended and does save a lot of angst, and we can get you set up on the right path. And again, Deanna is going to provide more information on how to contact our team later in this presentation. But with that, I'm going to pass my mic over to Deandra. You can see I'm tongue-tied. I have Deanna and Deandra on our call today, but Deandra Avalos is our subject matter expert on all things credit related, and she'll talk about our loan qualification basics as it relates to credit and introduce you to our valuable Aero department. So Deandra, I'm going to hand the mic to you, honey.
Thank you, Christy. Good afternoon, everybody. Again, my name is Deandra Avalos. I've been in the mortgage industry for 22 years and was fortunate enough to find my home with Taylor Morrison about 14 years ago. To say I was excited when presented the opportunity to be a part of our Aero department 11 years ago is kind of a bit of an understatement. I love being able to educate buyers on the ins and outs of credit while assisting you on your journey towards home ownership. Credit's like a thumbprint in its uniqueness, just meaning that no two customers' credit profiles are the same, and each one tells a different story. When you apply for a mortgage, your loan consultant is going to pull a tri-merge credit report. It simply means a report from all three bureaus, Equifax, TransUnion, and Experian. And when reviewing your residential mortgage credit report, the median or middle score is what's going to be used in determining your loan approval, your interest rate, and your mortgage insurance premiums, if applicable. If one or more borrowers on a mortgage, it's going to be the lower of the middle scores between the both of you. This visual just provides a look at the factors that make up your overall credit score. And as you can see, the combination of the payment track record and debt load makes up about 65% of your score based on the timely payments and utilization. It just kind of means how much you owe versus how much credit is still available or unused. Then it's followed by the age of your credit history, new credit, and the mix of credit types, student car loans, revolving debt, and even mortgages. There's quite a bit of information on this slide regarding the credit basics. I'm mainly just going to touch on the difference between the soft inquiry and the hard inquiry. There's a lot of myths about credit inquiries, but the soft credit pull doesn't impact your score. That's going to include things like pre-approved credit cards that you might get in the mail, or if you're on Credit Karma and it shows you which cards you can qualify for, checking your score with the bureaus, employment verification. The hard inquiry is going to happen when you directly apply for credit, like a credit card, student loan, the car loan, even a personal loan. These inquiries remain on your credit report for 2 years. They can cause small incremental decreases in your overall score, but on average, it's less than 5 points. Only 14% of buyers lose more than 10 points because of an inquiry, and 89% of that time, inquiries aren't even listed as one of the top 4 factors that are impacting your credit score. So when you're shopping for a big loan like a mortgage or an auto loan, you typically won't see those dings if you're shopping around within a 14 to 45 day time frame from that initial inquiry. You may have already gone through a pre-approval with another lender. You might be concerned about another inquiry on your credit. When you pre-apply, though, with a loan with Taylor Morrison Home Funding, we're going to do a soft credit pull, which provides us with 2 of the 3 scores. And then once you make the decision to purchase a home, we'll move forward with the formal loan application and then generate the tri-merge pull with that hard inquiry taking place. We're going to send out this presentation for you at the end so you can review all of the credit basics. I just want to quickly mention that employment and income, bank balances have no impact on your score. But as Christy talked about earlier, they're both main factors in your loan approval, and they typically indicate a strong repayment history. Here at Taylor Morrison Home Funding, we have a department that was designed solely for qualification improvement and loan enhancement, our ARROW department, or Able, Ready, and Own. We offer personalized strategies to help enhance your credit and provide guidance and education to assist you on your path to homeownership. ARROW isn't only for those seeking credit score improvement to gain qualification, but also for those with great credit that are just looking to improve your scores. ARROW is a complimentary service for both prospective homeowners as well as those that are already under contract to close on a home. You're not under any obligation to purchase a home, but we will tailor that path specific to your needs. After you pre-qualify with your TMHF loan consultant, they can enroll you in our ARROW program, and we'll run the credit simulations based off of your tri-merge credit report and provide a personalized improvement path based on your needs. Some examples of the recommendations are kind of listed here. It could be to open up a new account, to be added or removed as an authorized user, pay off accounts, or pay down balances. If you've applied with Taylor Morrison Home Funding, our ARROW consultants are familiar with your financial profile, so we work hand in hand with your loan consultant and Taylor Morrison to ensure that we're not making any recommendations that would hinder your ability to purchase, like using your down payment funds to pay off debt. We engage with you and we help keep you on track to meet your goals with open communication, whether that be by phone or email or both. In just the last year, we've assisted hundreds of families with an average enrollment time of less than 90 days. Over the last 10 years, Arrow's helped over 4,800 families achieve the dream of homeownership through qualification improvement while also gaining financially through your score enhancement. If at any time you think that we could be of assistance, you can start by reaching out to your local loan consultant team. And with that, I'll turn the mic over to Deanna Ball to share more about our team here in Vegas and how to get started with Taylor Morrison Home Funding.
Thank you, Deandra, and good afternoon, everyone. Thank you for joining us today in the middle of the afternoon. I appreciate your time. So I am the branch manager here in Nevada, and I'm also a local loan consultant working directly with our Taylor Morrison home buyers every day. I've been a part of the Taylor Morrison family for almost 3 years now and have been in the mortgage industry for, I'd say, the last 19, focusing mainly on new construction lending. New construction does allow for a longer build process or a longer time that we work together in most cases if you're or many cases if you're doing a to be built. And I really do appreciate how much I get to know the families as I work with them during the build time. Even on our short closes, it's nothing better than being part of the process and getting you closed within 30 days. And truly, it is my favorite part of the process, assisting and helping with the financing to get in your dream home. Now, the customer experience is always at the top of my mind, and I look forward to helping every customer get into their new home. And not only do we work side by side with the builder, we also, like Deandra mentioned, we work directly with Arrow. And I wanted to just highlight something or situation that came up recently that was pretty awesome. So I wanted to, so first off, I recently had a buyer who wanted to review current interest rates, and the buyer was not ready to lock in their rate, but wanted to know what the current rates look like. So I reviewed the buyer's overall profile, pulled up the interest rates for that day. The buyer at the time had a 704 credit score and was putting 10% down on a conventional loan, very typical for Nevada market. The pricing on that day would actually give the buyer a rate of 5.875. However, with the help of Arrow, so Deandra and her team, we were able to get this buyer's credit score at 40 points, which took the score to 742. And then the buyer was able to lock at a rate of 5.5. That interest rate difference gave our buyer a savings of $128 a month, which actually is a little bit more than $1,500 a year and over $46,000 on the full life of that 30-year term. It was super impressive. I mean, the whole process through Arrow is definitely one that you want to take advantage of, even if it's just to just add more to your score, or if you need it to set up a plan, they're here for you. So now we will move on to what mortgage suits your needs. So Christy and Deandra discussed the basic loan qualification criteria and provided some tips on credit score enhancements. Now we're going to briefly touch on the most common loan products, including some of their overall features and benefits. So this slide does contain a lot of information there. I'm not going to read it all, but I'll just kind of highlight some of the loan products. So first off, let's start with a conventional loan. So a conventional loan is a non-government loan. It's our most common mortgage product here in Nevada. There is a typical expected down payment of 20%. However, many people are not doing 20% down. You can actually put as little as 5%. There are even conventional loans that are specific to first-time home buyers with only 3% down payment that's required. So that myth of having to have 20% down, it's definitely not the case on a conventional loan. You could do as little as 3% if you're a first-time home buyer. Conventional loans do have a maximum loan amount of $700,000. And this actually may change once they announce the new loan limits, but we do expect them to be at least $700,000. Now, if you look at the next box there, we have VA and FHA loans. Those are established by government agencies. A VA loan is an excellent loan product for active duty or veteran military service members only. There's little to no down payment required, flexibility with higher debt to income ratio requirements, and a lower minimum credit score compared to conventional loans. So moving on to FHA, FHA is a loan secured by the Federal Housing Administration and requires only 3.5% down. A common myth is that an FHA loan is only for first-time home buyers, but this is absolutely not true. There are loan amounts restriction based on the county loan limits. In Nevada, it's $420,680. So the loan amount cannot exceed that. However, we are expecting that to increase, and hopefully that will be announced soon. There definitely is more flexibility when it comes to debt to income ratio and credit score requirements, similar to a VA loan. Both products, FHA, VA, are excellent choices, and I would say our market does about 30% with government loans. So, and lastly, we have the jumbo loan, which makes up less than 5% of our current Nevada closing populations. A jumbo loan is a loan that has a loan amount that exceeds a conforming loan limit. So it's a loan amount over $700,000. These loans are typically offered directly by institutional investors and banks. These loans are designed to meet the needs of high income earners who are purchasing a higher valued home. So we do offer jumbo loans, and they, like I said, they're typically they're through a bank, and they're a great loan product as well. So these are the most common loan types, and we have many different offerings at Taylor Morrison Home Funding to meet buyers' needs. So we can go on to the next slide. So we're going to talk about housing payment. I know that Christy touched on this just a bit, but we're going to talk about affordability. So what makes up a total housing payment? There are basically 5 key components. You have your principal and interest, your property taxes, homeowners insurance, mortgage insurance if applicable, as well as homeowners association dues, which is also known as an HOA. Those are typically paid separately, but we do have to take those in consideration when we're looking at housing expense. So then we talk about how much can you afford. We mentioned debt to income ratio a couple times, and it's definitely a critical piece of your loan approval. Your debt to income ratio tells the lender how much you can afford. The debt to income ratio calculation compares how much you owe against how much you earn. So if you're looking at your gross pre-tax income, the lender wants to be certain that after paying your new mortgage and your credit obligations, you got money left over to pay for those basic expenses. That includes your federal and state taxes, not here in Nevada, but they need to make sure that there's enough for taxes. They need to make sure that the basic needs such as food, clothing, childcare, and utilities can also be paid for. So when an underwriter is looking at the debt to income ratio, they definitely are honing in to making sure that this home is affordable to you. A solid rule of thumb is to not have your housing and monthly credit expenses be above 40% of your gross income. With that said, there are loan programs that will allow a higher than 50% debt to income ratio to be considered, such as FHA and VA financing that we touched on earlier. Many home buyers in Nevada are above 40%. So even on a conventional loan, it's not unusual to edge closer to that 50% mark. To justify higher debt to income ratios, you would typically need strong compensating factors such as good credit history and cash reserves in the bank. To calculate your own debt to income ratio, you would consider your proposed new housing payment and only your credit expenses monthly. Your housing payment would include the monthly principal and interest on your loan, monthly homeowners insurance, monthly real estate taxes, and in some communities there is a SID if applicable, and you would actually include that as well. Plus the monthly mortgage insurance if that's applicable, and also any monthly homeowners association dues for your community. So you would then you'd add that to your monthly payments report on your credit report, and then divide that amount by your gross monthly income. This ratio helps you and the lender determine your personal affordability ratio. Please keep in mind that expenses like groceries, utilities, gas, childcare, all those extras are generally not included in this equation on a conventional loan. VA loans do include childcare, so there are some differences for each loan product, and we're here to guide you to determine which product suits your needs. So you're not expected to obviously remember all this, but our loan consultants are here to talk to you about these different products and see which one's going to be the best. At Taylor Morrison, we understand that purchasing a home is not something that happens often in someone's life. Sometimes it's your forever home and that's it. And sometimes you can move 3, 4, 5 times throughout your lifetime. It's both a financial and emotional commitment, and likely the largest purchase you'll ever make. So it's very important that we're here for you and able to help guide you every step of the way. So as we wrap up basic mortgage qualification, I want to introduce you to Dorothy. I think it was mentioned earlier. So Dorothy, just like Dorothy from the Wizard of Oz, Dorothy is here to help lead you down the path, your personal yellow brick road, and provide you state-of-the-art secure mortgage technology. Dorothy always works alongside your Taylor Morrison home funding team to bring you the utmost superior home financing experience. By coupling technology with the much needed personal touch, with the protection of industry standard encryption technology, you can trust Dorothy with anytime, anywhere account access and secure document transfer alongside real-time loan information. So this program is going to be available to you throughout the entire process, and it's going to help lead you to your new front door. So whether you're ready to pre-apply, possibly considering our Aero services, or just simply want to talk to a mortgage professional, you can get started by going to taylormorrison.com/home-financing. If you want to pre-apply for financing and gather some details on what you qualify for, simply go to the Start Your Journey tab at the top. If you look, it's circled on the top in blue. And then select your area and community of interest, and you'll be prompted through some of the customer-friendly finance questions. If you're looking at the community in Ovation, you'll notice that Pahrump is not listed, Las Vegas is listed. So you'll choose Las Vegas and then choose your community, which will list Ovation and some of our communities out in Pahrump. Now, once you submit your request, one of our local loan consultants will be in touch with you very soon. If you're seeking Aero counseling, you can get started online with the pre-application, and one of our professional loan consultants who can run a credit simulator for you and connect you with one of the Aero consultants as well. They'll create the right path for you towards purchasing a home. And don't forget, as questions come up a lot, we only look at a soft credit inquiry. So you're going to do that pre-application. We'll do a soft credit pool, and that's going to be at the initial stage. A hard credit pool inquiry is only needed for Aero credit simulation or your formal loan application after you purchase your home. Now, if you just have general questions and you want to talk, you can click Talk to Us and send us an email. Your local Nevada loan consultant will get back to you. You're emailing them directly, and you should hear from a team member within just a few business hours. I monitor this as well, so it goes to my entire team, and we will get back to you as quickly as possible. With that, we hope that we expanded your mortgage knowledge today just a bit, and we thank you for spending the time with us today. Now, I'm going to turn this back over to Bill, and he's going to go over some exciting news here with Taylor Morrison in Las Vegas.
Thanks, Deanna. That's a big buildup. As far as exciting, one of the things that we do here at Taylor Morrison is try to be as innovative as possible, making sure that we're coming to you, giving you the ability to buy a home at your convenience. And we know it's not always easy to get out to a site, so we have ways to navigate. In today's market, it's really important to give you the opportunity to use your mobile device. You can actually go through and start the journey by scheduling an appointment, either with a phone call or a virtual appointment. What that means is you can actually visit a community virtually. We have tools on our website that allows you to see the homes, and we'll kind of get through that. But one of the things is just really understanding how it starts. Using the tools online, make sure that you can find the community that best suits you. Kind of figuring out if the floor plan flows. I think for a lot of people, everybody lives different. And one of the things that we want to make sure is that you find the right fit for you. So not all of our homes look the same. They all have a little bit of flair that may appeal to somebody else. So what we try to do is kind of meet the buyer where they want to be met with the type of living type. So whether it be a great room or traditional living with formal living or dining, we have different opportunities throughout our division. So if you start online, one of the benefits is you go into Nevada, you go to Las Vegas, and then you get to figure out what community best suits you. Do you know where you want to live? Is it in Summerlin? Is it in Pahrump? Is it in Lake Las Vegas? Or is it in North Las Vegas? We have all these options for you, and this will kind of help you figure out where you want to be. Being relatively new to Las Vegas, I found out Vegas is very small, and although it's a little bit different. I was used to commuting a lot further than I do today, and I got a little spoiled because it's so great. Traffic's pretty low. We get across the city in less than an hour, a half hour in most cases, and you can really get to almost any of our communities if you're in the center of Vegas within 45 minutes. So that's a great appeal to Las Vegas. It's really a small town feel with a big city vibe. Our online reservation system is really evolved. So if you go to one of our communities that really kind of fits your needs, we have Desert Pearl highlighted here. It's one of a small infill product, and not to change the verbiage, but meaning an area that wasn't previously built, but it has existing residential around it. We've created some of these sites here in Las Vegas where you can actually go through and find, 25, 30 houses within a small area. These are fantastic because they get built really quick. You don't have to live through construction very long. Desert Pearl in itself is a single-story community, which really appealed to a lot of people in that area. It sold very fast. But what you can do is you can actually go in, reserve the lot. If you look at this map here, it'll show you a color code key that tells you whether a home is actually sold, if it's in the process, or if it's quick moving. So you get different opportunities through our website. You can actually go in and reserve that home today with a reservation. You'll get a call from our IHC to confirm your reservation, making sure that you decided that you wanted to reserve that home. And then we can start the process of buying all within 24 hours. So it's a great process, and it's really new to home building. So next steps. Do you want to set that virtual appointment, or would you rather come in and see us? For a lot of people, it's an opportunity. If you're not within Las Vegas, we get a lot of people from out of state and that don't have the opportunity to get to a site relatively quickly. So what we do is we give them the opportunity to do a virtual appointment. Or if you have the opportunity to come into town, schedule an appointment with us, we'll meet you and we'll take that time to kind of show you our community. One of the other things that we ask is, if you are working a real estate professional, please let us know in advance. One of the guidelines that we do offer is their assistance in the event that you feel the need. You can have your real estate professional pre-register you so that you can come out and view it, or they can come with you on your first visit. Those are the two requirements that we have, is to know that you're working with the real estate professional on your first visit. And then also using Taylor Morrison Home Funding. It's a very powerful tool for you right now. Many of our homes have a mortgage incentive. What that means is an opportunity to help you get into a home. It's a great time to buy right now since there's a lot of flux going on. Inventory levels are still low, but at least you're not waiting in line. So that's the other thing that we have, and you can figure out what best suits your needs. And then ask us questions. Those are one of the opportunities that you have. We have plenty of time to work with you. Someone on our team will address your questions and make sure that you feel confident in taking that next step. So for those of you that actually have a home currently, we do have a partner with OfferPad. They are a home buyer. What they will do is they will come in, evaluate your situation, see whether or not they can offer you a price on your current home to make sure that takes that stress away. So for a lot of people, they worry about getting their home on the market. Will it sell? Will it not sell? Many builders in this time are going away from a contingency. And the reason for that is just because of the timing that it takes. So with OfferPad, that'll alleviate that stress. You can go through, have them come in. You don't have to have showings. They'll get you an offer. And if it's acceptable to you, then we can move forward. We can get you into your new home over at Taylor Morrison as well. They'll coordinate the timing, which is one of the big advantages to one of these services. In the new home buying process, many people experience a double move. And that's solely because you can't coordinate the closing of your existing home and the closing of your new home and make that all work. So timing is really important. And what you would want to do is to make sure that this situation helps you take that stress away. You can extend it for 6 months if you have to for your closing, or you could do a lease back from them. There's tons of opportunity with OfferPad, and we'll have a link for you to kind of go and ask those questions. So benefits of buying a quick move-in. This is my favorite. So for a lot of people, they've experienced buying a home in the past, and it's normally through what we consider resale, meaning a home that's existing that somebody else is selling. Well, we have a similar situation with a quick move-in. It gives you the opportunity to move into a house anywhere from 3 to 5 months, could be 30 days to 45 days, depending on how far along the home's gone. They've been professionally curated by our team to go through and design to make sure that it meets the modern trends. They also give you the ability to know what your price is, what your rate is really quickly, because we'll have a really quick close time frame. So that takes some of that stress away. I know when you want to build a house with a builder, sometimes you're just not sure because you don't know what holds in the future. Price is going up, price is going down, interest rates, which way are they going? None of us have a crystal ball, but we do our best to figure out what can serve you today, and a quick move-in tends to be our best opportunity. The benefit to a quick move-in as well is a better warranty than what you get in resale. Resale houses, a lot of out-of-pocket expense. You may have to replace the carpet, tile, paint, landscape, you name it. There's a lot of hidden costs that you don't consider when you're buying a home. At least in a new home, you're going to get the security of that warranty. It's a 124, so 12410. So you get your 1 year for your incidentals, you get the 10-year on your structure. So there's a lot of opportunity there. And real quick, Christy, did you want to cover this so I don't mess it up?
Sure. I would. I don't think you could mess it up, Bill, but I'm more than happy to. It's my wheelhouse. It's mortgage. Yeah, thanks, Bill. You know, right now, and Bill, you correct me if I'm wrong, but Taylor Morrison on their quick move-in homes closing prior to the end of the year is offering anywhere from 4 to 5% of your total purchase price towards financing. And we have been blessed that our builder has decided to purchase below market interest rates for our new customers. And when you look here at this slide, you can see that we are offering right now a 5.99 30-year fixed rate. And what that means, relatively speaking, is our national interest rate average right now is hovering at the 6.5, 6.7% range. So you get this long-term 30-year fixed rate at 5.99. But what makes this extremely exciting is that Taylor Morrison is going to subsidize your mortgage payment for the first 3 years in what we call as a temporary rate buy down. And essentially, a lot of people myth up and think that this is a adjustable rate mortgage. It's not. It's a fixed rate mortgage where your builder is going to pay the difference in your mortgage payment, giving you a payment equivalent on year 1 to having a 2.99 rate, on year 2 at 3.99, in year 3 at 4.99. So when you look at the little grid in the middle, it just kind of shows you that difference in principal and interest payments. And if you look at the 5.99% interest rate on a $500,000 loan amount, you've still got a payment under $3,000, but you're saving nearly $800 or more than $800 a month on the first year. And then you just kind of step into home ownership from there. And when you look at those interest rates of 2.9, 3.9, and 4.9, it really is rolling back time as far as the interest rate market is concerned. We do still qualify a customer on that long-term rate of 5.99, but from a budget affordability, it really does help someone that is looking to get out of renting and enjoy all those benefits of home ownership. And keep in mind that you're marrying the home, you're not marrying the loan. So there are never prepayment penalties on these loans. And if you were to decide to refinance, or this was your first home and you weren't planning to be there for very long, any of the interest savings that you're seeing that maybe you weren't able to benefit from in the first 3 years because of a refinance, those remaining funds would be reduced from your principal balance if you choose to refinance or sell the home. So there's just a lot of creative ways that we can utilize the incentive funds for financing that Taylor Morrison is providing. Now, you know, just another example, if cash to close is really something that you've been wanting to save for and you just haven't had the opportunity, but affordability is not really the hot button for you and you feel comfortable with where payments would be on current market rates, then just know that those funds could be flipped over and cover all those closing costs I talked about earlier to help you out with cash to close. So it's just one of the ways that we're tailoring our incentives to help our customers kind of not feel so frozen on what to do and worrying about what the future is going to hold when we're able to really roll that back for you. So thanks, Bill, for letting me just kind of go through that. And again, this will be sent out to everybody to just kind of absorb it. Numbers are not always the easiest thing to absorb. And Bill, I think you might be touching on some market insights. Is that right?
You're correct. I'm going to go through a couple things. and just kind of
Awesome.
talking about this. For those of you on, one of the things that we do have the opportunity with this 3-2-1 program, we're very proud of it. It's a great opportunity for any of you that are interested in buying right now, any of our quick move-ins. This only runs until closing of 12/30. So that's really important to know that if you're looking for a house, we have some quick move-ins that this really will apply to here in Las Vegas. So that's a great opportunity for you right now. So Las Vegas. I absolutely love it. One of the things here in Vegas that we really, really are proud to represent is the growth. Las Vegas overall has really a small supply of homes compared to most of the nation. So we have a small market, but we also have very small supply. So if right now we were to stop building, we would run out of homes for sale in approximately 4 months. That's what the current metrics say based on current availability. So if based on current pace and homes available, it's a 4-month supply. We're one of the fastest growing areas just in general in the United States. We have a 2.5% increase each year of what we've seen, and population's just over 2.4 million right now. With the new census coming out, maybe about 2.5. We're seeing a lot of influx for people leaving other states. We love it. Want them all. Come live at Ovation and enjoy the sun. Living in Las Vegas, we have 310 days of sunshine, no state income tax. So I came from California. I was very, very pleased to look at my paycheck when I saw that I didn't pay a state tax. So some of you could see a benefit to that. Right now, we still have that 4.4% job growth. Really fantastic, or 5% job growth, sorry, 4.4 unemployment rate. Doing fantastic. There are national parks. There's always something to do here in Las Vegas. And like I said before, it's that big city with a small town feel. Las Vegas, one of the things that I've noticed, and I don't know if any of you on the call, if you're actually currently in Vegas or not in Vegas, my rate of visitors has increased tremendously. So once I moved out here, more and more people want to come to Vegas to come see me. So it's always fun to see family members that live out of state. Benefits of owning a new home. These are things that are very personal. And this is what we found. It's, that long-term investment. Some people use it. Generally, you'll see appreciation over time, depending on what's going on in the world. It may take a little bit longer than before. Last year was an anomaly, but who knows? The market seems very cyclical. You just have to wait and see what goes on next. Real estate typically appreciates slightly higher than inflation. No guarantees, like we said, but that seems to be the trend over time. Your mortgage rate potentially could be a tax deduction if you're a current renter. So that's something you haven't experienced. There's no credit currently for rental. But if you actually have an interest rate that you're paying, that might be an opportunity for you to do it. And then on the emotional side, this is where I found just the experience for most people that we deal with is that pride of ownership, taking that time to actually invest in something and to watch it grow. If you have a family that's growing, actually moving into that location and enjoying that, the pride of that is incredible. Not to go off on a tangent, but I have a daughter that is married and they're going to have a child. It's fantastic. They just bought their first house, and that pride of ownership is something really to speak of. When you go through and know that's where you're going to raise your family for the next however many years, I think it's a really different feel, and you want to see your community come together. They were previous renters, and some of the stuff they couldn't do was paint the walls, put in shutters, landscape, put in a garden. These are all experiences now that they have the opportunity to grow with their little family. So I'm really excited to see people when they take that step into home ownership. It's just a completely different feel. It's not for everybody, we know that, and everybody has a certain time, but that's what we would like to help you with. And then just knowing that you have that peace of mind of a warranty. I think that's probably the biggest thing that you don't get all the time. We like to really promote that. So thank you everybody for staying on the call so far. We do have a gift for you. It's a $2,000 towards your design studio experience. So if you go and decide to build a to-be-built home, this $2,000 will go towards your options. Or if you're buying a quick move-in, we'll apply that to the current options that are in the home. So it's basically a price reduction that is not a part of your mortgage incentive. So when we go through and your financing incentive is something that they can work with you on. If you want to do the 3-2-1, that money can help towards that. If you want to just go ahead and do something different, they can talk best on how to use that money. And we have our team ready to help you. So if we go on to the next. Just want to say thank you very much for taking the time to be on the call today. We really appreciate you. There's a QR code here to help you find our Las Vegas homes. If you need any assistance, our people are here to help. I have a phone number for you as well, and I'll put it in the chat. For our internet home consultant, it's 702-213-9424. And they'll get back to you as soon as they can to help you with your search. And I just want to say thank you very much for taking the time and attending our webinar.
Thanks so much, Bill. Thanks, Deanna. Have a
Thank
great
you,
day,
everyone. Have a great
Bye.
day.